Why did Delta Airlines suddenly become one of the most searched topics in America? What does Bank of America know that you don't? The answer is a secret strategy, a fundamental shift in their business that has Wall Street buzzing and could completely change how you think about airline stocks. This isn't just about flying, it's about a financial powerhouse in disguise. In a world of financial noise, let's find the signal. Welcome to Smart Money Sense. Today we're doing a deep dive financial analysis into Delta Airlines, ticker symbol DAL. The company just posted a record quarter that blew past Wall Street's expectations, and analysts are scrambling to raise their price targets. But the real story isn't just one good earnings report. It's about a quiet transformation that has been happening for years, a premium pivot that is now firing on all cylinders. In this video, we're going to break down their incredible third quarter earnings, expose their secret weapon that insulates them from economic shocks, and analyze their balance sheet to see if the company is truly financially sound. And most importantly, we'll run the numbers to determine what Delta stock is actually worth and whether it's a smart buy for your portfolio right now. Let's get into it. So, what exactly happened on October 9th, 2025? Delta announced its third quarter earnings and the numbers were staggering. The company reported adjusted earnings per share of $1.71. Analysts were expecting around $1.52. That's not just a beat, that's an 11.76% upside surprise that made investors sit up and take notice. Total operating revenue hit $16.67 billion, a 6.4% increase from the same time last year. Think about that. In an environment where many are worried about consumer spending, Delta is growing its top line at a healthy clip. But here's the metric that truly impressed Wall Street: profitability. Delta's operating income jumped a massive 20.5% year over year, hitting $1.7 billion. Their operating margin expanded to 11.2%. In the notoriously tough, low-margin airline industry, numbers like these are almost unheard of. It shows they aren't just selling more tickets. They are making significantly more profit on each sale. Naturally, the stock surged. Following the news, Delta's stock jumped over 8% in pre-market trading, and it pulled the entire airline sector up with it. When a single company's results are so strong that they lift their competitors, you know something special is happening. But strong earnings can be a one-time event. To know if this is a sustainable trend, we have to look deeper. And that brings us to the core of our Delta stock analysis: the strategy behind these numbers. If you're already starting to see that this is more than just a simple airline stock, do me a favor and hit that like button. It's a zero-cost way to tell the YouTube algorithm that we're delivering real value, and it helps our channel reach more people like you. We've only just scratched the surface, and the most important part of their strategy is coming up next. For decades, the airline business was a commodity game, a race to the bottom on price. Main cabin seats were the bread and butter, and airlines were at the mercy of economic cycles and brutal price wars. Delta decided to play a different game. Their secret weapon is a relentless focus on the premium traveler. This isn't just about fancier seats, it's a complete overhaul of their business model. Let's break down their three-headed revenue monster. First, premium products. We're talking about Delta One, their luxurious lie-flat business class, Premium Select, which is their take on premium economy, and Comfort Plus. In the third quarter, revenue from these premium products surged 9% to a whopping $5.8 billion. This segment now makes up roughly 38% of their total passenger revenue. 10 years ago, the main cabin was 60% of their business. Today, it's just over 40% and shrinking. CEO Ed Bastian has now confirmed that premium cabin revenue will officially overtake the main cabin in 2026, a year ahead of schedule. Why is this so powerful? Two reasons. One, these are the highest margin products Delta sells. And two, once customers experience premium travel, they rarely go back. Delta's president Glenn Howenstein said their retention rates for premium products are in the mid-80s. It's sticky, high-margin revenue. Second, their loyalty program. The partnership between Delta's SkyMiles program and American Express is a financial juggernaut. In the third quarter alone, Delta received $2 billion from American Express. That's a 12% increase year over year. This is high-margin recurring revenue that has almost nothing to do with selling plane tickets. It's a fintech company hidden inside an airline. And third, other revenue streams. This includes their cargo business, which grew 19%, and their maintenance, repair, and overhaul, or MRO business, which skyrocketed 60%. Delta has one of the best aircraft maintenance operations in the world, and they service planes for other carriers, creating another stable, high-margin revenue source. When you add it all up, these premium, loyalty, and diversified streams now account for 60% of Delta's total revenue. They grew 10% year over year. This strategic mix is what insulates Delta from the economic pain felt by lower-income consumers. While budget airlines struggle, Delta is thriving by catering to corporate travelers and affluent households. A great story is one thing, but as investors, we need to see if the numbers back it up. A profitable company with a terrible balance sheet is a ticking time bomb. So let's perform a financial checkup on Delta. The biggest concern for airlines after the pandemic was debt. During the crisis, they had to borrow billions just to survive. A key part of our Delta stock analysis is seeing how they've managed this. The results are impressive. As of September, Delta's total debt stands at $21.72 billion. Now that sounds like a lot, but context is everything. Since June of 2024, just 15 months ago, Delta has paid down over $3 billion of debt. That's a 12.5% reduction. Their debt-to-equity ratio, a key measure of leverage, has improved dramatically from 2.0 down to 1.15. This shows incredible financial discipline. They are using their profits not just to reward shareholders, but to fortify the company's financial foundation. Now, let's talk about cash. Revenue is vanity, profit is sanity, but cash is reality. A company's ability to generate cold, hard cash is the ultimate sign of health. In the trailing 12 months, Delta has generated nearly $8 billion in operating cash flow. After accounting for capital expenditures, the money they spend on new planes and airport upgrades, they were left with over $3 billion in free cash flow. This is the money they can use to pay down more debt, invest in the business, or return to shareholders through dividends and buybacks. It gives them immense flexibility. Their free cash flow guidance for the full year is between $3.5 and $4 billion. For a company with a $40 billion market cap, that translates to a free cash flow yield of around 8 to 10%, a number that should make any value investor's eyes light up. All right, breaking down a balance sheet and understanding cash flow is what separates casual market watchers from serious investors. It's the sense in smart money sense. If you believe in doing this kind of deep dive analysis, take a second to subscribe to the channel and turn on notifications. We release videos like this every week to help you become a smarter, more confident investor. Now, let's put all this information together and figure out if DAL stock is a bargain. So, we have a company with record profits, a brilliant premium strategy, and a strengthening balance sheet. But is the stock cheap? This is the final and most crucial part of our Delta stock analysis. As of October 15th, 2025, Delta's stock trades around $61 per share, giving it a market capitalization of $40 billion. Its trailing 12-month price to earnings, or PE ratio, is just 8.7. Let me put that in perspective. The 10-year historical average PE ratio for Delta is nearly 20. The average PE for its peer group, including United, American, and Southwest, is over 21. This means Delta is currently trading at a massive 59% discount to its peers, despite being more profitable and having a better strategy. Looking forward, it gets even more compelling. Management guided for full year 2025 earnings of around $6 per share. At the current price, that's a forward PE ratio of about 10. Other metrics tell a similar story. Its price-to-sales ratio is a mere 0.64. Its price-to-book is 2.13. And as we mentioned, its free cash flow yield is a stellar 7.68%. In a market where the S&P 500's earnings yield is struggling to beat Treasury bonds, Delta's 11.57% earnings yield is phenomenal. So what does Wall Street think? The consensus is overwhelmingly bullish. Of the 24 analysts covering the stock, 22 have a buy or strong buy rating. The median price target is $72, which represents a 17.5% upside from here. Top banks like JP Morgan and Bank of America have targets of $85 and $74 respectively. Now, no investment is without risk, and it would be irresponsible not to consider the bear case. First, macroeconomic risk. Airlines are cyclical businesses. A severe recession would hurt travel demand, particularly the corporate and premium segments that Delta relies on. While their strategy provides some insulation, it's not immune. Second, fuel price volatility. Fuel is a huge cost for airlines. While prices have been favorable recently, a geopolitical event could cause oil prices to spike, which would immediately pressure margins. Third, competitive pressure. Delta's success has not gone unnoticed. Competitors like United are copying their premium strategy, and some low-cost carriers are trying to move upmarket, which could intensify competition. And finally, there's the risk that their pivot to premium goes too far, leaving them vulnerable if high-end consumer spending suddenly pulls back. However, given the company's strong balance sheet, diversified revenues, and industry-leading operational performance, I believe these risks are more than priced in at the current valuation. So, let's bring our Delta stock analysis to a final verdict. We have a best-in-class company that has successfully transformed its business model to focus on high-margin, sticky revenue streams. It is demonstrating industry-leading profitability and operational excellence. It is using its massive cash flows to aggressively pay down debt and strengthen its balance sheet. And yet, despite all of this, its stock trades at a significant discount to its historical valuation, its peers, and the broader market. The recent attention from Google Trends and Wall Street is not just hype. It's the market waking up to a fundamental re-rating story. Delta is no longer just a cyclical airline, it's a premium travel and loyalty powerhouse. The bull case is clear and compelling. Now you have a clearer picture of Delta Airlines. But this is a conversation. I want to know what you think. Do you believe in their premium strategy? Are the risks too high? Leave a comment below with your biggest question or takeaway from this analysis. I read and respond to as many as I can. And if you're ready for the next deep dive, click on the video on your screen right now. Subscribe to join the Smart Money Sense community and never miss an insight. We'll see you in the comments.